Hey traders, Michael or 𝐿𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Kabuki Day, December 10th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, obviously today was Fed Day. So we do have a lot of interesting stuff to talk about in this video. We could start with the fact that we're up 0.66% today, approaching / in the vicinity of the previous all-time high. Fed decided to lower interest rates, therefore it shot the market in the northern direction. So the previous all-time high is exactly at 689.70. Today we made a high of 688.97, so only 73 cents off from the previous all-time high. And real quick, just taking a look at my number one favorite market-leading indicator, CAMP IWM, the previous high came right around 252.77, and today we made a high of 256.57. We'll call that interesting information for now. We'll get back to that in a moment. Going back over to the Spiders, right now we're on an hourly time frame, and over the past week, you'll notice that we have a rising wedge pattern situation, creating this range that we've been trading within for the last week or so. Last Friday, we made a high of exactly 688.39. We did spike that, find some overhead resistance near this area, and then close candles below it. This was a little bit of a spike the high and rip it right back down. The complete opposite of our favorite trade, the spike the low and rip it right back up. So we did retest these highs right here, couldn't get above and close candles above, and now we're closing below. That is some interesting information. We'll just take it at face value for now, but the market did have an opportunity to get above that level, but she couldn't do it. Again, just taking it at face value, what happened today might not be the same thing tomorrow. Remember, as of right now, we are uber close to the previous all-time high. And if we can manage to take out these highs and start closing candles above, then we could expect that to be the next destination. But from where we stand right now, what is the probability that we're even going to be able to reach the previous all-time high? And the answer is, I think it's a pretty high probability. At this stage in the game, I don't see why they can't go ahead and at least touch it or even poke their heads through. And I'm about to go over why I think that's the case. So we do have our trend line that we've been talking about all week. If you don't know where this trend line comes from, then frankly, I don't know where you've been, but we'll go over it anyway. The trend line comes from this high, November 3rd, to this pivot high, November 12th. To the right of this vertical line represents today's activity, so everything from right here, and we could see the importance of that trend line, obviously. But what's very interesting is right before the decision at 2 o'clock, look where we went back to, the trend line, right before the decision was made. We were closing candles above it, which was the bull case scenario, and we were talking about that pretty much all day within the live room and inside the numbers. If we go over to an hourly time frame, a bigger picture perspective, every single hourly candle today, we closed above the trend line. That is bullish behavior. And to top it off, if we go over to a 4-hour time frame, the bigger the time frame is, the more dominant it's going to be. We could clear out this stuff. We don't need that anymore. Zoom into that. And if you remember from yesterday, we were talking about this inside bar pattern. We had a breakdown candle and then some consolidation within the breakdown candle. Here we were trading within it 1, 2, 3, 4 candles. 4-hour candles. And then today, look what happened. We said that the high of this candle at 686.64 was the line in the sand. And as you can see, today's close is 687.46, closing above that line in the sand number. And what we said from yesterday's video, that if we do start to close candles above that number, then we could expect the same energy to be released towards the upside, which takes us at around 691 give or take. Notice from these two numbers, we managed to make it right to the midpoint, pretty much right in the middle. But what we can expect from this inside bar pattern and closing candles above that high is try to make it to 691. That is a target towards the upside, and it could be a place of some overhead resistance. It's not exactly 691.20, it's around that area give or take, but we should expect a similar move towards the upside, therefore making its way towards the previous all-time high. That number comes in at 689.70. So back over to a 1-hour time frame, as long as we're staying above this trend line and still continuing to close candles above it on the larger time frames, and in addition staying above that 686 number that came from the high of this breakdown candle, 686.64, if we continue to stay above that and close candles above and above the trend line, then we have a very, very good chance of retesting the previous all-time high. and even potentially making a new high right around that 691, 692 give or take. We're going to have those intraday numbers ready for Inside the Numbers and Live Room members. Speaking of Inside the Numbers and the Live Room, let's go take a look at what happened today and see if we had any trades today. And by the way, that's a rhetorical question. Of course we had some trades today. Right now we're taking a look at the 0 dark 30 notes. We could start with the morning pivot, and this has been a very important number that we've had on the board almost every single day this week, and that number comes in at 682.75. Another number that you should be aware about is the first main support area at 681.20 to 680.85 give or take. So right now we're taking a look at a 1 minute time frame. The pivot is in green, the trend line is in black, and the first minute of the day, right here to the right of this vertical line, the high was exactly 682.76. Spiked the pivot by 1 penny. And as you can see, that was very early on overhead resistance. Right at the pivot, right at the trend line. Don't you think that that number and trend line is important? Again, another rhetorical question. And then after finding overhead resistance, where was the target towards the downside? The first support number at 681.20. We did come up a little bit short, made a low of 681.31, 11 cents short, but that was the target towards the downside. So that pivot trade in the morning was more so a trader's choice. It was a little bit more on the riskier side, just because we were opening very close to that number. At that point, it could really go either way. Also, we had a gap up above. That was another overhead resistance place that we were looking at. So we did have some traders take that trade, but as I always say, there's another opportunity around the corner. So going back to Inside the Number notes, we can scroll up. Let's see what else we got. At 9:43, if we get back up towards the gap or 683.35, which was the next overhead resistance number in the sequence, that could be some initial overhead resistance and a trader's choice. And then also we covered both sides of the story. We obviously need to know where we're wrong in the trade. So I said if we head to that level, that means that we'll start to get above the trend line and the pivot. And we have to understand that closing candles above those two numbers is the bull case scenario. As traders, we always have to look at both sides of the tape. So we're back over to the chart. We have that overhead resistance number in red at 683.35. And then also I did mention the gap up above that came right here at 683.05. So that was a mini zone of overhead resistance. And let's go ahead and break this down. As you can see, we touched the gap, came right back down to the pivot / trend line. Didn't really give you a full base hit. We were looking for a little bit more. We went back up, came up literally 2 cents of that 683.35 number. So we'll call that close enough. Can't split hairs over pennies when it's 2 cents, 1 cent. Remember, the market's not perfect, and we're not in search of perfect, but take a look at where we went right back down to. You guessed it, the pivot / trend line. Came back up. We did manage to complete that number as we hit it pretty much right on the dot. Right here, again right here, more times over here. But as you can see, that was a pretty decent overhead resistance area. A place where the market shouldn't just waltz right through. And then eventually we did come back down, getting below the pivot and the trend line. We did have traders take this short up here, and she provided you a nice trade. That was the opportunity that we had on the board. That 683.35 was a place where she shouldn't just waltz right through, especially with lower volume in anticipation for the Fed. At 9:59, 1 minute left till the first 30-minute close. Remember, we were looking to see how we treat that pivot number / trend line. We have to understand where we're wrong in the trade. And if we continue to close candles above that pivot / trend line on the larger time frames, in this case we were looking at the 30-minute, but then I did mention that the hourly was going to be more important, and that was going to be the bull case scenario. But from that gap / 683.35, that was a scalp with potential place. If you shorted from that area, you should have already booked a profit in your pocket. Don't let the remaining portion go bad on you. If you took any of these trades, leave a comment down below and help a brother out. Let others know how well the numbers work. But wait, there's more. Let's go back over to the 0 dark 30 notes and we can see how price reacted when we got to those areas during the Fed meeting today. So we do have an overhead resistance zone at 684.25 to 684.95. And then as a just in caser, we have another zone of resistance at 685.95 to 686.40, and then another one at 687.70 to 688.70. So let's start with our first zone. That's on the board. As you can see, we made a high right here at 684.22, came up 3 cents short. Again, can't split hairs over pennies. That was overhead resistance. And then when the Fed hit, we went to the back end of the resistance zone at 684.95, spiked it by a touch, and then came right back down. Some initial overhead resistance. So now we have our next resistance zone on the board. We did come up short of the first number right here. So that is a little bit of a first time, best time situation. So on the second time around, we could either look for a spike through or the back end of the resistance zone. As you can see, we did manage to reach the back end number, spiked it by just a touch, and then came right back down. How you doing? And then lastly, the last overhead resistance zone that we had, the numbers are up on the board right here. We did come up short of that first number. Again, another first time, best time situation. Then we finally made it to the back end number at 688.70, spiked it by just a touch, and then ripped it right back down. Where to? Right in front of that 687.70. Went back up again, utilized it as overhead resistance once more, and then came right back down. So overall, I know my numbers. How do you like dem apples? And one more thing, and we could go ahead and remove these lines. We don't need that anymore. Remove this garbage too. Just as an example of what we were talking about previously and yesterday is right here, this candle, we have a little bit of an inside bar pattern. Consolidation, 1, 2, 3 candles inside of that breakup candle, never closing candles below the low, which would invalidate the pattern. As you can see, we did spike through it, but never closed candles below. Therefore, the pattern is still good. And as we said earlier, because markets like to do the same thing over and over again, all charts act and react the same way, we could expect a symmetrical move towards the upside. And where does that fall right in line with? That 688.70, in which we did stall out at that area and find some overhead resistance. I would write that down and put that on a sticky note. What's going on over at Camp IWM? Well, we kind of already touched upon this before, but we're now above the previous all-time high and making new highs. Today we made a high of 256.57 and closing candles above that previous all-time high, in which we were struggling to get over before. So now the question becomes, can we stay above and close candles above? That's the main thing that we need to look for. We can come back down, spike through this area right here. That's not going to be unusual behavior. First off, we can see if we could utilize the previous all-time high, which is now a previous breakout area, as support on the way back down. But if we continue to go below it, this most recent breakup candle low, right at around 250.50, which is close to a big fat round number, can be some more initial support. This area right here was a consolidation period, and we know that the markets love to come back and retest those areas in which we were previously eating some time off the clock. Plus, you got a breakup candle low in that vicinity and a former breakout area. We could potentially use that as support on the way back down. But again, the main thing is if we could continue to close candles above that 252.77. We're going to have numbers ready for Inside the Numbers and live room members for Camp IWM. What's going on with the transportation department? We're up 2.66% today, and we sliced right on through that back end overhead resistance number, and now closing candles above. That is certainly some bullish behavior. And just take a look at how far we're getting from home base. Just a little puzzle piece information. I do have another number up above at 17,634, and honestly, if we get above that and start closing candles above, then I could see us very easily retesting the previous all-time high, which comes right around 17,845. So we are experiencing some bullish behavior in the transportation department, blowing by that overhead resistance zone and already on its way to the previous all-time high. And that's my second favorite market leading indicator. And my number one favorite, Camp IWM, has already blown by the previous all-time high. Not really much we can do as of right now, other than the fact to see if we continue to stay above 17,450, which can now be some initial support on the way back down. But really, there's no action we could take with the transportation department right now. We just have to wait and see how we treat that level, and if we could even get above 17,635, which is really the last line of defense besides the previous all-time high. Very interesting with the Q people. We're up 0.41% today, and we have still not managed to complete this unfinished business at 632.08, this gap right here. Still just eating time off the clock in a rising wedge pattern formation. That 632.08 should be some overhead resistance, at least from a first time, best time situation, but take note that we are eating time off the clock right underneath that area. So we can be building energy / recocking the gun for another move higher and retesting the previous all-time high, which comes right around 637, and that could be the true destination of the Q people, just like where we are with the spiders. As of right now, there's no real change with the Q people. We're only up 0.40%, again eating time off the clock, so there's no real change on the chart. But the more time we spend eating time off the clock right underneath this gap right here, there is an opportunity that we can go up even higher to retest the previous all-time high. Certainly something to take note of. What about XLF, the financials? We're up 1.14% today. we got back above that trend line and closing candles above, and we're even closing candles right near the vicinity of these highs right here in which we were having trouble getting above. But we're in a position where we're now closing candles above the trend line. Tomorrow, if we could come back down into that trend line and utilize it as support, that is the bull case scenario, and we can expect another move higher to take out these highs and even push up towards or near the vicinity of the previous all-time high. We do have a number down below at 52.90, 53 give or take. That is going to be an area of support if we do get down there. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're up 1.38% today. Here is the previous all-time high, and as you can see, we took out that high, made a new high, and closing candles above. That is bullish behavior. But just because we did it today doesn't mean the same situation will apply tomorrow. We could come back down near the low of this recent breakup candle. That can be some normal garden variety behavior, and tomorrow we really just need to see how we treat this number, if we can continue to close candles above. But we're already making new all-time highs. Everything about this chart from a technical analysis standpoint screams bullish behavior. Above all the moving averages, continuously making higher lows, and SMH is just on a bull run right now. Not really that much we can do about it, but we could wait and see if we get any more puzzle piece information, or if something dramatically changes on the chart. But again, technical analysis standpoint, we're in a very bullish position. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝑰𝐿𝐼. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.